Okay, so looking at the source material for today, it really feels like we're in a strange spot with the economy.
Strange is a good word for it. One of your sources put it quite well, didn't they?
Yeah, a cocktail party where everyone's trying not to freak out. That just it really resonated. It feels like that.
It does. You've got all these conflicting signals, right? Economic data, Fed talk, what's happening globally.
Exactly. It creates this palpable tension. So our mission today really is to unpack why things feel so precarious based on these sources and, what should we actually be watching?
Let's dive in. A big flashing light, according to the material, is gold, hitting $3,300 an ounce.
Wow. Yeah, that screams nervousness, doesn't it? People running for cover.
It often does. It suggests real concern about maybe currency stability or just broader market jitters. But then you have this contradictory signal.
Which is?
Well, retail sales, they jumped, what, 1.2% in March?
Yeah.
Surprisingly strong.
Right. So people are nervous enough to buy gold, but also still out there shopping.
Kind of. It's that tension. Your sources talk about these immaculate vibes on the surface. But maybe underneath, things aren't so rosy, like those rising credit card balances mentioned.
Yeah, the credit card balance is crying in the corner. It's like surface confidence, but maybe fueled by debt.
That's a possibility the sources raise.
Yeah.
And then you layer on the policy side, Jerome Powell.
Ah, yes, the Fed chair. What are the sources picking up there? Sounding cautious.
Very cautious. The phrase highlighted was, risks to growth are rising.
Okay. And the interpretation is?
Basically, don't expect the Fed to swoop in with immediate support or rate cuts anytime soon. It's more of a wait and see. A bit of skepticism about what might come next from the FOMC speakers.
So nervous markets, cautious Fed.
Hmm.
And then there's the global stuff, which feels intense.
It does. The U.S.-China trade situation is a big one in the source material. That huge 125% tariff.
And China hitting back immediately. The WTO and IMF must be concerned.
Extremely. The sources flagged warnings about a potential massive correction incoming if this escalates further. Real worry about a global slowdown.
Yikes. And it's not just trade, is it? There are mentions of more direct conflicts.
Yes, the U.S. strike in Yemen on the Ras Isa oil terminal, over 80, reported dead, tragically. That definitely caused ripples, even if brief, in the oil markets.
Shows how fast things can spill over, right?
Exactly. And also the ongoing terrible situation in Ukraine. Russia's alleged actions in Sumy, 34 civilians.
And the international reaction seemed muted, according to the sources.
Yeah, a G7 statement, but described as the U.S. ghosting in one piece. You do see concern reflected elsewhere, though, like NATO's Mark Rutte visiting Kiev. It all adds to the instability.
Okay, shifting gears a bit. What about companies? The sources mentioned some specific stocks taking hits. UnitedHealth.
Yeah, a big drop for them, 22.4%. The potential link suggested is rising medical costs, maybe hitting their bottom line.
Interesting. And Nvidia, too, even with all the AI hype.
Down 6.5%. Possibly related to those AI chip export bans, maybe starting to bite into revenue projections, even though they're still talking optimistically.
And I saw Tesla earnings are coming up. Always a bit of
A wild card.
Yeah.
Absolutely.
Yeah.
You never quite know what Elon Musk might say or do. Adds another layer of uncertainty.
Okay, so quite a cocktail of risks. Given all that, what are the key economic indicators the sources say to watch this week specifically?
Right, for the immediate future. Wednesday looks important. We get PMIs, purchasing managers indices for the Eurozone and the UK.
Sort of an economic vibes check for Europe.
Exactly. And also U.S. new home sales. The forecast is around 680K. We'll see if housing demand is holding up.
Okay, Wednesday. What else?
Thursday, that's another key day. U.S. unemployment claims, durable goods, orders a gauge of business investment, really, and existing home sales data.
And deviations there could really move things.
Absolutely. Yeah. If those numbers surprise significantly, either way, expect the market to react. They're seen as pretty crucial data points right now.
So wrapping this up, the core tension seems clear from the sources. Strong consumer numbers, maybe.
Butting up against, a very cautious Fed, rising geopolitical risks, trade wars brewing.
And these specific warning signs, like gold prices soaring, some corporate vulnerabilities showing?
Precisely. The sources paint this picture of underlying fragility, even if the surface seems okay in places. Hot gold, a cool Fed, trade disputes flaring, earnings uncertainty. It's a lot.
It really makes you step back and think, doesn't it? Is the market really pricing all this in? Is this apparent calm? Actually normal, given everything underneath?
That's the provocative question your sources leave us with, I think. What's the thing, the event, the data point that could finally break the surface tension and shift the mood? Something to definitely keep watching.